The crypto space is full of lucrative opportunities.
Money on my head, that means money on my mind.
From NFTs on the blockchain that you can trade, to virtual real estate that you can buy or sell, to selling my feet pics on the dark web. Anyway, there are a ton of different unique ways to make money on the internet, more specifically in the crypto space, and I think that I just stumbled upon one of the best and most bulletproof ways to do just that. And I'm gonna share it with you in this video. And no, it's not selling feet pics.
You're teasing me, you naughty naughty.
Today we're gonna be talking about what is called the Coinbase effect. And I'm gonna show you exactly how it works and how it worked for me. So that way you don't have to go out there and blow all your own money trying to test this theory out. This is for entertainment purposes only, of course, so don't get any great ideas about throwing all your life savings by trying this yourself. So first, let me explain how this all works. The Coinbase effect is a theory that states that many up and coming new crypto coins that are listed on the Coinbase exchange have a quick price pop as they're being listed. And I know what you might be thinking, there's no way that this is real, or if it were real, don't you think that more and more people would be taking advantage of it, and then it would be less and less profitable? Well, yes and no. A lot of the whales and the big boy investors do know about this phenomenon, and they actually use this method to make money. So what I'm sharing with you might kind of spoil the whole ordeal here, okay? And before I share with you how it worked for me when I tested it out, this effect has actually been studied, and it can be clearly seen in a cryptocurrency, for example, called Cardano or ADA. The price of Cardano, right after it was listed on Coinbase, had shot up immensely. The price of the coin was around $1 when it was listed around March 17th. 5 days later, the coin was up between 8 to 9%, and 2 months later, the coin was trading over 100% higher than it was before the listing. Yeah, 100 freaking percent. The crypto analysis company called Messari conducted a study looking at tokens and the Coinbase effect in effect, and analyzed the coins that went onto Coinbase and took a deeper dive on the first 5 days of trading, and they found this, that the Coinbase effect, like I mentioned earlier, was actually more powerful on Coinbase than any other exchange, even though they're not the biggest, and they concluded that the Coinbase effect is quite real. I want my money! But again, how bulletproof is it really? Like, for example, if I followed this strategy for the next 10 listings, what would happen? And I did just that. And based off those 10 listings, how many of them became winners? What I found was actually quite remarkable. In the short term, 9 out of the 10 coins that I invested in actually went up. And in that 5-day period, they went up from anywhere from 2%, and for some of the coins, they went into the double-digit percentiles, and one of them even hit 50%.
Holy cow! Oh my God! Oh my God! You see that thing? Yes.
But in the long term, after a couple of months of being invested in these coins, all 10 of them followed the same trend that Bitcoin and Ethereum did, which in this market was down. So in the short term, the Coinbase effect worked and they shot up, but in the longer term, they just followed the trends of their big brother and sister, Bitcoin and Ethereum. So after seeing that 9 out of 10 cryptocurrencies won, doesn't this just make a super viable strategy to follow, at least for traders, or if we're in a bullish market for long-term investing? Well, honestly, if it was a bull market, this would be a no-brainer, because again, not only would most of the cryptos you invest in actually go up, but in a bull market, they might go up even higher.
Yo, you see that plane?
But there's still a little bit of luck involved, and it's also about knowing when to get out of the particular coin as well. But most of us don't have a crystal ball that lets us know when to get in and out of a cryptocurrency, but if you do, hit your boy up just for like a couple days. I just need to know a few things. But so even though this Coinbase effect works, it is helpful to know about, because in a bull market, and on new listings that are coming onto the market, you could potentially pull off a few 10, 20, 30% gains in a short period of time, nearly every time a new coin emerges. This is not investment advice, this is just what I personally found out. And again, even if the strategy is working and working and working, you still have to be defensive in your strategy to walk away with a profit. And remember, on the short-term gains, you will be paying a higher tax as well. Hopefully you learned a lot in this video. If you did and you like videos like this, make sure to smash the like button. It really helps out me and the YouTube algorithm. And let me know if there's anything I might have missed down in the comment section below. If you have any questions, let me know down there as well. And I look forward to seeing you in the next video. Thank you all so much for watching. Peace out.